So Varun, I got a call from an insurance agent this morning saying that there's a phenomenal new scheme that has come out. I know a lot of people get these calls, but this guy made it sound like it was something that is sprung out and the most beneficial thing. It was going to help me save tax and I'm going to get some returns at the end of it and all that. This doesn't look like a very sharp deal. It looks like somebody else is going to be making the money, while I think I'm in the on the profit. So does it even make sense?
Yeah, so it's a very broad topic. Short answer, most likely not. It doesn't make sense. And there's a long history to this, right? The history is that ये जो आज call आ रहा है is a culmination, I personally think, of many things, right? So whenever we grew up, started working, our father, parents, any elders in the family, like एक LIC ले लो, and it's good for you,
Right.
that make that investment. 20 साल बाद इतना पैसा मिल जाएगा and so on and so forth. That LIC ले लो is therefore life insurance in the garb of some investment scheme, because LIC is good for savings. So the name itself, Life Insurance Corporation of India, is not savings schemes of India or whatever it is. That life insurance became a way to save money or make investments. Why it happened 30, 40, 50 years ago, why all of us culturally got into a LIC to le lo, is difficult to answer now after so many years. But culturally what has happened in India is we have started to look at life insurance as something that I need to make a return from. अब आप FD में भी पैसा डालते हैं, म्यूचुअल फंड में भी पैसा डालते हैं, स्टॉक मार्केट में, गोल्ड, रियल एस्टेट, whatever it is, these are all investment avenues for me to multiply my wealth or create some savings. But life insurance sadly is not in that category, but वो बन गया है वैसा. And that to me is the biggest challenge. So to answer your question, I don't think that it will be a good deal. We can get into what types of plans and why this happens, but yeah, short answer is that it's likely bullshit, if I can call it.
So, for example, I'm asking you a simple layman's question. If I have to make an investment and if I have to get a life insurance policy, does it make sense to bifurcate them and treat them as two different entities? And in the long run, does it make more sense to do that as opposed to look at these schemes as, we always think we're getting a bigger bang for our buck when somebody puts it like this, and that's probably what they're playing on. I see that they're two different things completely. Would you bifurcate it and say, as much as to say that we'll actually end up making more money if you're able to split it and treat these two entities as completely different things in your life?
100% I would bifurcate, but let's spend a couple of minutes on the why, on the bifurcation is needed, what is sold today, why is it sold like that. I think if we can all understand the reasons behind it, I think the options become clearer, or the choices will be a lot clearer. So today, if you look at it, there are hundreds of plans and schemes and life insurance schemes and ULIP and money back and so many schemes. I think if you distill it all down to what are the basics, there are only 3 types of broad life insurance products. All of them are otherwise a permutation combination of each other. Kuch isme plus plus, kuch minus minus. You're just trying to create more and more schemes which are easy to sell, or maybe use that call sir kuch naya hai, but essentially all of them boil down to 3 types of plans. One is what we would call pure protection. That is the typical meaning of insurance, that if something untoward happens, I pass away, there are liabilities on me, maybe I have a home loan, maybe my kids are young, their education, and somebody has to pay for all this in my absence, because let's say I was the primary earning member. That's what essentially basic insurance is for. And let's call it pure protection. This is to protect your family from your untimely demise. Let's put it that way.
Just so that I can punctuate this. And the premium on this will be considerably affordable if you are only going for life insurance.
Because आप पैसे बनाने की कोशिश नहीं कर रहे हो. You are not trying to get a return.
Right.
All you are trying to say is that It's like your car insurance. Like you're not getting any return from your car insurance. That I'm just saying that in case there's an accident, I get paid.
That's it.
Now in this situation, in case there's an accident with me and unfortunately I pass away, then that's about it. I'm not trying to make a return out of it.
Correct.
Funny thing is, a lot more people have car insurance than life insurance. I don't know whether car is more important or their life, while car is also a compulsory product. But partly हम कार इसलिए खरीदते हैं क्योंकि government का डंडा है. The cop will catch you. But life insurance, maybe we are a little more loose with it. Anyway, this is the same premise. Now comes the second construct, okay, which is maybe the best way to explain it is, हम बैंक में FD करते हैं. अगर आप उस FD को और लाइफ इंश्योरेंस को जोड़ के एक प्रोडक्ट बना दें, okay, that is the second type of product.
Correct.
Okay, which is typically called money back, endowment, guaranteed return. These are some vague names, labels being put on these products, but essentially all of this, insurance plus FD sold together, in one single packet.
Right.
The third one is an insurance plus a mutual fund, which is investing in the stock market, bundled together and again packaged as what we typically know as unit linked or linked to the market performance kind of insurance plans. Pure protection, protection plus FD, protection plus mutual fund. ये तीन sort of broad categories हैं. And why these categories exist? Because आप बैंक में अलग से FD ले सकते हैं.
Correct.
आप अलग से mutual fund ले सकते हैं. Two reasons. Okay. One is I think because as Indians थोड़ा एक LIC का culture है, and secondly we are unable to differentiate that what am I buying for what. If I may use the word preying on my greed कि यार कुछ पैसा डाला तो कुछ मिलना चाहिए. Pure protection में क्या हो रहा है कि if nothing happens to you, actually not getting anything. Okay. But in this, in the insurance plus FD and insurance plus mutual fund, कुछ return आ रहा है. So it's easy to sell to you. Because you are very uncomfortable, or an Indian is today very uncomfortable paying for something in which I'm not getting anything back unless I die. That concept itself is probably harder for people to assimilate. मैं पैसा तुमको दे रहा हूँ, अरे तुम मुझे कुछ नहीं दोगे वापस. Like that's the situation, right? Now when you add these two things, let's take the example of a bank plus FD, which is typically money back, endowment, guaranteed return plan, whatever it is. आज आप हर साल you keep paying me 1 lakh, 2 lakhs, whatever it is, 50,000, 30,000. At the end of 20 years, 15 years, 10 years, I'll give you some X back, guaranteed.
Correct.
Okay. So, which is what we explained is insurance plus FD. Any plan in India today is actually giving you not more than 3.5% return. Interest rate अगर मैं बोलूँ तो आपने जो पैसा डाला है उस पे आपको 3.5% annually on an average, I'd say maybe 0.5% here, 0.5% there, but on an average that's what this plan is giving you. Okay. If you were to put this money that you're giving the insurance company into a bank FD, टैक्स भी काटेगा. जो इंटरेस्ट अमाउंट मिलता है बैंक FD से उस पर टैक्स लगता है. वो टैक्स काटने के बाद भी 5-5.5% बनेगा. 5-5.5% is what you will end up making. So essentially by giving this money to an insurance company and clubbing your insurance requirement with your return requirement, you are actually making for 20 years 2% lesser.
On that amount.
Okay. Secondly, जो इंश्योरेंस कंपोनेंट है, मान लीजिए आपको 10 लाख का इंश्योरेंस चाहिए, you need about 10-20 lakhs, whatever it is that, let's say.
So let's put numbers in it so people can understand the magnitude of it.
So let's say 50 lakhs is my life insurance coverage. I've been told to pay 2 lakhs per year as premium, and I've been told that you will get 50 lakhs coverage in this 2 lakhs. My numbers might be wrong, but roughly the math is the same. And so I've paid 2 lakhs for 20 years. I've paid them 40 lakhs over the course of 20 years. And I'll be told something like, you've paid 40 lakhs. After the end of 20 years, you will get some 60 lakhs, 70 lakhs, whatever it is, some number back. And during the course of this policy, in case I pass away, you will get that 50 lakh rupees. This is how the scheme is designed. Okay. अब आपने 2 lakh rupees per year डाला, and let's assume you had put that 2 lakh rupees in an FD instead of an insurance company. Because you're getting 2% more, maybe that corpus at the end of 20 years of 60 lakhs, 70 lakhs, whatever the insurance company is promising, would definitely be a lot higher than what this insurance scheme is promising.
Yeah.
And the life insurance cover that you're getting.
That's the thing I want to know.
The life insurance cover that you're getting, कि 50 lakh रुपया मिला है, that 50 lakh cover if you want to buy independently.
Correct.
Outside of this scheme of return, you can probably get it for 10-15,000 rupees a year.
See, that is what the...
That's the game.
So, if you just want life insurance for 50 lakhs, you end up paying 15-20,000 rupees around that amount of money.
And depends on age, but shouldn't be more than that.
I'm saying ballpark.
Yeah.
But if you're combining that with one of these schemes, let us say mutual fund, then you're paying close to 2 lakhs. The greed that you're going to get a lot more money at the end of the 20 years.
Yeah.
But on the whole,
you're worse off.
You're worse off
by a big margin.
By a big margin. This is something that people have to understand.
And a second reason भी है why you are getting these calls and people are pushing these plans, whether it is could be an agent, could be a bank, could be financial advisor or whoever it is, because you're paying a lot more. 1 lakh, 50,000. Because when you're investing, nobody wants to make a 5,000 rupee investment. No? Then they're like, अरे सर आप 50,000 तो invest कीजिए, लाख रुपया डालिए. Because you're not deciding your life insurance cover.
Correct.
You are basing it on what return you want.
This is very important. This is very important.
The seller of the policy or the scheme is trying to push you towards a higher number. Why is he trying to push you towards a higher number? Because controversial statement, उसका commission ज़्यादा है. जितना बड़ा आप investment करोगे, उसको percentage उसमें से मिलेगा, और वो percentage का मोटा होगा. His commission, his or her commission that they are making. So whether it's a bank or the incentives are misaligned with the customer.
Correct.
वो customer is not in the center. What is in the center is how much commission I can make. By selling the pure protection, वो 10, 15, 20,000 रुपए का plan that we just spoke about, उसका 2,000 रुपया भी नहीं बन रहा है.
Correct.
तो वो बेचना नहीं चाहता है.
So if my objective is life insurance,
yes,
and if I buy a house and my EMI for that house per month, let us say for the next 20 years, is 1.5 lakh rupees, I'm still better off.
You are still
because
better off.
I have a property. I'm putting that 1.5 rupees into a growing
asset will appreciate.
Asset appreciation. And I'm only, if my purpose was only a life insurance, my 15-20,000 rupees ja raha hai. So this disparity is not clear to a lot of common people. You mentioned protection. Now I'm not fully sure I understand what protection actually means. And I'm sure half the people don't. So can you define what this protection actually means?
It's a difficult concept, but let me just simplify it in a way that why it is critical for all of us and what this protection really means, right? And your need for protection changes with age. Let's take a typical, somebody gets out of college, early 20s, gets into a job, maybe late 20s, gets married, starts to have children at late 20s, early 30s. And now decides to buy a home, for the first time. As bachelors, maybe you're living in rented accommodation. Once you get married, you want to buy a home, settle down, as they say. So as you start aging and getting to this mid stage in life, your financial liabilities start increasing. Okay. Earlier on, as a bachelor or as a single person, I am only responsible for myself. Relatively, my parents are also
still working.
Maybe still working or younger, right? So I have no real financial liability, okay? Unless, of course, somebody is sick in the family or something, which is a rare situation. But by and large, I'm saying typically I have no liability. The minute I'm 30, I start having children, and I have a home loan. अब मेरे ऊपर घर का लोन है, मेरे बच्चों का education है. Maybe my spouse is earning, not earning, or earning similar amounts, depending. Then you have lifestyle that you end up upgrading. Okay. My parents are getting older, so maybe there are medical expenses that are starting to come up in by the time you're mid-30s. So if you really take a view of somebody who's in their mid-30s, who has a typical life progression, एक mid-30s पे एक point आएगा where your kids are young, your parents are old, you have a home loan on your head, and all of this is, and your kids' marriage, which is going to come up maybe 10 years down the line. Maybe they want to study abroad or whatever it is. If you calculate all of this, it's in crores. Because inflation bhi jodiye, because today, your kids' education may be costing 5 lakh rupees, 2 lakh rupees, or whatever it is. 5 years down the line, if they want to go to college, or 10 years down the line, maybe it's a lot more. When you actually sit and calculate all this, what is the liability for your parents' health, your kids' marriage, their education, to settle them in life so that they can move forward? Maybe your spouse, wants to retire, your lifestyle, your daily expenses. Where will this money come from unfortunately, if there's an untimely death. This is the part that needs to get protected, that your family needs to continue as it is, even if there's an unfortunate event.
Yeah.
Okay. बच्चों का खर्चा चलना चाहिए, lifestyle चलना चाहिए, parents का health चलना चाहिए, home loan चुका देना चाहिए. You do not want the liability to fall onto your spouse and young kids. Where will this money come from? The sum total of what this liability is what you should be protected for, or what your family should be protected for.
Understood.
That's what ideally, at least in my head, life insurance is for, is the risk of dying too early when you have lots of liabilities on your head. And this risk actually comes down over a period of time.
Right.
Let's say you are earning well, you have now become a vice president, you've accumulated a lot of savings, your kids have gone to college, they've taken up a job, you've saved up enough money, your home loan is paid off. So actually you don't have liabilities now, or you have much lesser liabilities. That's the time the need for protection actually comes down. So if I were to look at it, it starts with no liabilities as a bachelor, then it just peaks. And then when you're in your 50s or 60s, it starts to come down. But this middle period of maybe your, I would say, late 20s, early 30s to your late 40s, early 50s, that's the space which is the most risky for a family, because anything can happen anytime.
Correct.
That's what needs to get protected, and that's what I mean by protection.
That's very evident. So I think the clarity is that, the riskiest time or the most relevant time for you to have the life insurance is between the late 20s to the early 50s.
Yes.
Because that's the time when the risk of you being a liability on your family, or your interests and your, whatever you've invested in being a risk for your family is the highest.
Yeah.
And that is the time that you need the maximum protection. And
your family needs you the most at that point. As the earning member, without you, the family does not survive.
Actually, they are in trouble.
Yeah.
If you have taken loans and if you've got car loans, for instance, and house loans, so either they lose that wealth, or they'll have to sell the house or whatever comfort that they have at their behest to actually go down the road or go down lifestyle.
A primary earning member passing away in a freak situation is probably the worst disaster that can happen to a family.
Correct. And the step down is,
it can throw families into mayhem.
Into mayhem, correct.
Yeah.
And that is the time, so maybe that is the time you can decide how much your life insurance should be, depending on your outgoing, so that the family's lifestyle is maintained at least about the level that they're used to.
Yeah.
Obviously, if I talk about this to my family, for instance, if I have to go and say, hey, you know what, I'm 32 years old and I'm thinking of taking a big life insurance to safeguard everything, I mean, there's a deathly silence in the family. As an Indian family, we are all very superstitious and we don't want to talk about bad things and stuff like that. And the family kind of reacts quite adversely to it, especially the elders and all, and they all start wondering if somebody's hiding something from them, or whether there is something wrong and stuff like that. So what is the best time and way to actually talk to the family and break this to them?
I think there are two parts to it. I would say a lot of people in India have now started realizing the value of this, getting this protection. So people are in two categories. One, they're just ignoring it, and not buying this product, or not covering the protection that they need for their family. And if they are, I would say a lot of them are not having this discussion at home. They're doing the right thing, the responsible thing, calculating what the liabilities for their family could be, lifestyle maintain karne ke liye kitna paisa lagega, doing some basic analysis, going ahead, purchasing a product, but not having a discussion with the family, exactly for the reasons that you mentioned.
And like you said, sometimes the family doesn't even know that they had the insurance.
And the family has no idea. One of the things that we see is that unfortunately somebody passes away, had done the right thing, but the family has no idea. कि किया क्या है, कहाँ है पॉलिसी, किस कंपनी की है, क्या है, कितना कवर है, कुछ पता नहीं.
सामने से आके कंपनीज देते हैं कभी?
So somebody has to inform them. Eventually, families figure it out because somebody will, the CA or somebody will inform. अच्छा check करो, life insurance है क्या? अच्छा इधर पता करो, उधर पता करो. Slowly over a period of time, they get it. I'm not saying that nobody gets it, but it's harrowing. It's absolutely unclear as to how they're going to go about it. Now coming to why don't people, like you rightly said, right? Like we are a very superstitious, emotional. Extra emotional, if I may call it. I think, as they say, there are only two realities in life, death and taxes. You can't escape them. So having a pragmatic conversation with your family to saying, hey, this is for our future. This is to protect our future. This is not a emotional topic of saying, hey, mujhe kuch ho jayega.
Or inviting bad news.
Or inviting bad news. I think we need to learn a little culturally. There's this complete other extreme of Western societies where people also include in their insurance their own funeral expenses. It's a complete, that's the level of individualism and independence that I do not want to. So I'm very clear that I'm not even putting the burden of my funeral expenses on my spouse or on my family. Like it's meticulous planning to that level.
Correct.
Versus, which in my personal opinion maybe is a little extreme. That's not how Indian families are wired. Like we all come together and everyone's kind of showing up. We are large extended families, but we are in the complete other extreme where even talking about this is like a taboo, right? So I would really say that this is circle of life. Maybe a little more philosophical point. All of us have to go someday. And just ensuring that your loved ones are well taken care of.
Yeah, because they're not part of your decisions when you're making them in terms of the financial ones. So they should not bear the repercussion of you not being around to fulfill those commitments. And so we've made it abundantly clear that the protection is essential.
One more thing: not only don't talk about life insurance, we don't even make a will.
Exactly. Oh yeah.
Most people don't make a will, and they leave family feuds behind. In a meaning, brothers fighting, sisters fighting.
Yeah, I mean, with the will also they're fighting, but without a will, it's chaos.
Yeah.
And I remember signing my own will, and it really feels like you're signing a death warrant. It feels nervous, but it's the right thing to do. It's absolutely essential thing to be done.
Yeah.
And it's very strange that our academic system or the schools or colleges don't teach you these basic things that have to be done. For what is the right amount of protection that a guy should aim for?
As we discussed, a little bit contextual, depending on what your family's context is. But 2-3 basic things I would cover for, like if any liabilities, all loans that I have taken or maybe even intend to take. Let's say I've taken one home, I intend to upgrade to a bigger home. So any loans is like the number one thing that, so the sum total of all outstanding loans, cards, personal loan, credit card debt. I know it's a rolling number, it's sometimes, but getting to some broad average to say at any point in time, I owe institutions, companies, people, something.
Society by large,
and all of that needs to be paid for. And the consequences, like you said, should not be on my spouse or on my children. So that's the number one thing to calculate and saying, hey, itna to cover karna hai. Okay. Second thing would be lifestyle. All of us have different lifestyles. Families adopt different lifestyles. So my monthly expenses to run the home, food, maybe if I have some staff at home, some or my electricity bills, or there's certain lifestyle choices we have. Some families survive in 50,000 rupees a month, some survive in 2 lakh rupees a month, 10 lakh rupees a month also. Now, if you have upgraded to a certain lifestyle, because let's say both spouse and me are earning, we're a double income family, it's very difficult to downgrade.
Correct.
It's not easy for a family who's kids are in international school and a fees is 10 lakh rupees a year to suddenly say, okay, I need to step down. So what does your lifestyle require? Ideal should be, at least I should be able to maintain my family's lifestyle. Kids should not be disrupted from the school.
Correct.
And so on and so forth. So that lifestyle, let's say my expenses are 2-3 lakh rupees a month, or I'm just throwing a number. And you need to assume that there's a certain inflation to it, because what costs 2 lakh rupees today is not going to cost 2 lakh rupees 5-10 years from now. Now that could be like a 5 to 10% inflation number. That's the other way to calculate it. By the way, you don't need to do all of this manually. There are many calculators available online to be able to help you plan these things, but it's important to plan them. I'm just giving a basic framework.
Understood.
So you'd look at what your expenses are going to be and what will be required for the next 10-15 years. In a sense, till maybe at least your kids are earning.
Correct.
And they're on their own.
That's
the second thing. The third thing is planning for events. Let's say I want to be able to have the capacity or have the flexibility for my child to be able to pick up any academic path in India, outside India. Maybe it's going to cost 30, 40 lakhs, 50 lakhs, a crore. I don't know. and I want to ensure that the kid, I've saved something for the kid's higher education. Again, like I'd say, different families have different views. Some families I've also noticed the kid has to take a loan, figure his life out, educational loan low. But again, I'm saying it depends on your family,
Correct.
and how you want to deal with it. Or a child's marriage, or my spouse's retirement years. These are other things that you can, plan for. To say I want to save up for my kid's marriage, and these are bulky or chunky expenses, right? These would be three things I would say. You need to think of these as three different buckets.
Right.
You may choose to cover all of it in one go. You may choose to forget about the events for now and the marriage and all of that, and say, okay, I'm going to buy some more cover later. But a good basic framework is to ensure firstly all your liabilities are taken care of.
Correct.
At least you're not adding. If you're not helping them, don't put more load on them.
More burden on them. Correct.
That's the basic thing. Second, maintain at least the household and the lifestyle. And the third is if you want to be extra careful and plan for
the
their
events.
future, their education, their marriage, your spouse's retirement, and all of that. That would be a good way. There are many, like I said, many calculators available online which can help you calculate this. Your financial advisor or a good CA can help you make these calculations to arrive at what that amount is.
So Varun, is this a expensive product? I mean, when should I plan to get it? And what is the kind of monies I'm looking at if I have to buy a decent, that is, if you play with numbers and actually give people an idea, suppose if I make sure my family needs 4 lakhs a month or whatever, what kind of numbers am I looking at? Is it an expensive product? That's what I wanted to know.
It's not very expensive, definitely, and this is my pet comparison, so I'm going to keep using it. It's definitely cheaper than the phones we buy today.
Smartphones.
So let me give you a number. For somebody who's 35 years old, let's say 35 years old, getting a cover of 1 crore, let's say, would probably cost them 16,000 rupees a year.
A year. Let me say this again. Getting a cover of 1 crore is going to probably cost a youngster between 15 to 16,000 rupees a year. Which is less than 2,000 rupees a month.
Less than 2,000 rupees a month.
Which is less than basically having one dinner outside.
Maybe one, I don't know where you eat. I don't spend 15,000 rupees.
You go with friends and something like that.
Yeah, of course. If you go out to a 5-star,
3 dinners,
you go out to a 5-star, you're going to get a 10-15,000 rupee bill for sure. But yeah, it's.
No, I'm saying per month.
Per month, of course.
I'm saying.
Per month, of course.
Per month, if it's going to be less than 2,000 rupees, this is a no-brainer, man.
This is a no-brainer. So maybe the requirement, however, could be more than 1 crore. 3 crores, 5 crores, or
I'm
whatever
saying
it is.
Exponentially this much, right?
20-25 times your annual income of today is also another way.
20 to 25 times your annual income.
Is when you calculate all this basic framework, liabilities plus this plus that, whatever, we've seen largely it comes to a number of 20-25 times your annual income.
So let's say your annual income is say 20 lakhs. You should be looking at a 6 crore.
4-5 crore.
I'm saying safely.
So, and that's also how much you're eligible for.
So I'm saying even if it's a 6 crore cover,
maybe 60-70,000 bucks a year.
A year, which is hardly 5,000 rupees a month, which is, I mean, I don't think people are even aware that this sort of insurance cover is available, unless you mix it with what we said earlier, where you're looking at it as mutual funds as well as safety, fixed deposit and stuff.
People end up mixing these objectives, right?
But I'm saying,
बहुत mix कर देते हैं. And then again going back to that topic of the mutual fund side, and again if you buy a unit linked plan, which is nothing but an insurance plus a mutual fund, आप 6 crore का unit linked plan, which guarantees you that 5-6 crore coverage in terms of death.
Correct.
वो तो affordable ही नहीं है as a unit linked product, because you're actually trying to invest in the market.
Correct.
So just separating this, there are views, and I'll even though I'm from the insurance industry, I'll probably end up bashing a few products that we do as an industry. Even a unit linked product, which is roughly works like a mutual fund, has some more tax benefits. I'll give you an example. Mutual funds में आपने 10 साल invest किया and you redeem your mutual funds and you get some money back. There's some taxes involved. In a unit linked in an insurance plan, which the same premium is getting invested, when you get your money back, today it's tax free. Okay.
Tax free.
So thoda sa arbitrage milta hai. Maybe it's better. But really, even if you look at it, even with that little bit tax advantage, I would say I would still not mix the two, because there's another reason. Mutual funds charge, or insurance companies, both of them, they charge you to manage the money.
Correct.
Okay. एक कुछ वो 1%, 1.5%, 0.5% fees लेते हैं. So if I'm investing 1 lakh rupees, they will charge me 1% of that 1 lakh rupees to manage the money, which is called FMC, or fund management charges. Insurance companies usually charge a lot higher than mutual funds. Okay. I would say almost 30, 40, 50% higher.
Yeah, because it's a combination of two services.
Combination of two services and so on and so forth. So while there might be some tax advantages in unit-linked plans, I would still argue that separating this, if you've got your basic pure protection cover going and it's fully sorted, 3, 4, 5 crores, 2 crores, whatever you come up with, after that, making choices between अच्छा mutual fund में थोड़ा सा मेरा tax ज़्यादा लग रहा है इधर लगा, you can do whatever you
Separately,
want. Separate it out. You know, I'm not saying don't buy ULIP or whatever it is. Definitely don't buy the bank plus FD product, which is the money back endowment, because that's like I have no better words for it. It's a rip-off. You know, you're better off putting your money in an FD. But get this done first.
Get this done. So we've established that it is essential.
Yeah.
We've established that it is best to keep it clean and simple, and keep the purpose is to ensure a future for your family in case something bad happens to you. The third we've established is it's not half as expensive as people are imagining it to be.
Yeah.
So 1 crore could be roughly around 14, 15,000, 16,000 rupees a month if you're insuring
a
for
year. Yeah.
And if it's 6 crores, it's hardly 70, 80,000 rupees a year. Is the right age to buy it.
This premium could be wildly different. See, unlike a lot of other products in life insurance, what is your premium decided today? Let's say the insurance company decides to charge you 15,000 rupees a year, is going to be 15,000 rupees a year forever. They're not going to increase the premium.
Yeah.
It's always the same.
The premium continues to be the same no matter
for
how long.
For the next 20 years.
Oh, okay.
It's 15,000 today, it will be 15,000 forever.
Understood.
Okay. If you try to get life insurance at the age of 40, 45, the same 1 crore cover could probably cost you 3-4 times. Okay. Maybe it'll cost you, that same 1 crore may end up costing you 50, 60, 70,000 rupees.
Okay.
Because the way the math works, and I think it's important for people to understand the math and why an insurance company does it like that, right? Like, so I'm letting out on some
professional secrets.
See, the younger you are, the chance of somebody having, there are only two kinds of, situations where people pass away. It's a medical issue or it's an accident. Right?
Yeah.
Like pretty much only, that's what it is. The risk of an accident for somebody who's 40 years old or 20 years old or 25 years is not very different. Not very different. Unless, let's say I'm into professional adventure sports or
of course,
something like that. Those are rare situations. So risk of accidents is largely similar. But the medical risk is significantly different. Significantly different. Somebody having a heart attack at 45 is now pretty common.
Yeah.
But somebody having a heart attack at 30, 32 is probably still happens, but the proportion is vastly different. Now to price the risk, now when you buy a policy from me or any other insurance company for at the age of 25, 30, 32, the risk is very low. Now I am charging you much lesser because you gave me as a customer many risk-free years.
Yes, correct.
मेरा तो मुनाफा हो रहा है.
Correct.
So I am ending up making reasonable amount of money from you in your risk-free years, relatively. So I'm making up for the risky years also.
Right.
But when you come to me directly in your risky years, then
you have to safeguard yourself.
I have to safeguard my business.
Correct.
Because I can't. The risk is a lot higher. So I'll have to charge you a lot more. So one critical thing to do is therefore buy it early. Like we established, the peak risk for anybody, and everybody's context is different, typically will start in the late 20s when they get married. Now, because I'm responsible for another life.
Correct.
We are building a lifestyle together.
Correct.
We're building a family together.
Correct.
That's when I start taking on responsibilities apart from my own existence. That's probably the right time that my spouse is taken care of, my home is taken care of, my children. So the right age to probably end up buying is your late 20s, early 30s. And keep the cover. Like we said, right, your needs go up.
Correct.
And then they come down. The other interesting thing is there's also marketing gimmicks now on these products saying this is whole life cover. This will give you coverage till you're 100. This will give you coverage till you're 80. So you buy at 30, but the cover stops when you're 80 years old. And now you're forced to pay for 30, 40 years. that same 15,000-20,000 rupees or whatever your premium is, you're forced to pay. That also is trying to, in my personal opinion, give you something that you don't need. Because you're going to collect money for the next 30-40 years. If I'm a customer, I actually think at late 50s, if I have a well-managed life, my liabilities start coming down. My home, like I said, home loan is paid off, kids are settled. I don't need the cover. So the right way is probably to buy some 1-2 crore, whatever, some limited coverage, evaluate every 5 years. As my risk is going up, take it up to 3 crores, 5 crores, 6 crores. And then when I'm into 50s, bring it down or finish it off.
Understood.
You know, that's probably the right cycle.
Right. So, so to summarize, the best time to go for it is when your liabilities increase because of the size of your immediate family.
Yes.
And then their risks and requirements.
Yes.
And then taper it off as your health.
You're closer towards retirement.
To becoming financially stable.
Yeah.
And your health is, in the middle. So, what are the factors that determine what my premium will actually cost? Are there any other external factors also that they keep in mind when they judge your premium?
I would say that the most important factor is age. And I can tell you it makes a massive difference. It's not like with every passing year you have some 10% increase in premium. Once you're closer to 40, or especially if you've crossed 40, the premiums are steep. They're really steep. This 15,000 can go up to 1 lakh.
Correct.
Okay, for the same amount of coverage. And now you're forced to pay 1 lakh forever. Or for the next 20 years.
Whatever, yeah.
Till 60, let's say you're trying to get yourself covered. So the biggest factor I would say is age. The second factor that is your current medical condition. Okay. So I'll give you an example. Smokers have to pay a lot more. So, a 15,000 example that I just mentioned, it could be possible that the smoker is supposed to pay 25,000 for same coverage, because as a smoker, your chance of a heart condition, cardiovascular, and cancer is heightened.
Okay.
Massively compared to a non-smoker. So the rates could be different for a smoker, could be different for a non-smoker. If you're mildly diabetic, your rates could be different. If you're highly hypertensive or you have too many conditions, by the time, let's say you're 35, 38, nowadays we hear about lots of young people having lots of conditions.
Right.
Again, the worst case scenario is that you may not even get a plan.
Oh.
Nobody's willing to insure you because you're too risky.
And does the occupation also play an important part of it?
Yeah, I would say there are some occupations. Let's say I work in an oil rig. I fly down to oil rigs, or I work in defense, or I'm like a professional adventure sports athlete or whatever. These are also situations where life coverage could be expensive, or even sometimes not available.
Even if you have a health condition, they will still cover you?
Actually, I don't have a good answer for it. I would really say it depends.
Okay.
Like I said, if these are lifestyle conditions largely controllable, which maybe don't have too much of a bearing on your lifespan. I think you may be charged a little higher because you're little more risky than a fully healthy.
Like you have a skin condition or you have some that kind of stuff.
See, usually the things that bother insurance companies, if I can call it, is chronic lifestyle conditions, blood pressure, diabetes, because they lead to a lot of other complications as as you age. Definitely, all of these people who are hypertensive and diabetic or have blood pressure issues end up getting into some sort of heart conditions, mild, severe, whatever it is. So it depends on what the extent of your heart condition is, your medical condition is. So broadly, I would say age makes a difference. Your smoking status definitely makes a big difference. Smoking, drinking, both. And the third is just in what health condition you are.
So I understand term insurance, but I still feel like we're not getting anything else in return. It's like they've safeguarded you for 20 years, and then at the end of it, you're only counting your good fortune that nothing happened to you. But that's all tata bye-bye to the money that you've paid.
Yeah.
There's no real.
Yeah. I think that's a good thing.
It's a good thing.
And that brings me to a very interesting point that we innately as Indians, we have this need to get our money or, as some return. And frankly, like I said, that's not the purpose of the
That's
product.
not the purpose of it.
That's not the
That is very important to
purpose of
understand.
the product. It's again, I'll go back to the car insurance example. I don't worry that मेरी गाड़ी ठुकी नहीं यार. You know, like why did I not have an accident? I didn't get anything from my insurance company, right? I'm happy actually I didn't have a accident. So I should be happy I've not died.
Exactly.
Why am I worried about making money from it? You know, but this is what gets, if I can call it, preyed upon. You know, this need to get some money is what causes all this over packaging of products.
That's important to understand.
Yeah, and there are these two so you know, very interesting thing that some smart marketing has done. As people started realizing that term is important or the pure protection product is important, and they had the same exact doubt, right? कुछ पैसा नहीं मिल रहा है. New plans came up in the market, you know, which is called zero cost term or term with return of premium. Okay, these are two variants that got created, right? एक pure term है, उसमें कुछ पैसा वापस नहीं मिल रहा है. मर गए तो पैसा वापस, you know, you'll get your cover. Otherwise, the money is all gone. So smart packaging started to happen, where they're saying, okay, you know, people have this thing, यार कुछ मिल नहीं रहा है वापस. So we are going to call it term, which is the pure term product, pure protection product, which is typically called the term plan. They'll say term with return of premium, that for 20 years you pay me, nothing happens to you, I'll give you your money back. Okay, almost imagine in today's world like a 100% cashback product. Okay, 20 साल के बाद मेरे को पैसा वापस मिल गया. You know, or a different variant of it is zero. You can also label something like this zero cost plan, right? Because essentially, you're saying आपने 20 साल पैसा दिया, मैंने आपको पूरा पैसा वापस कर दिया. So actually, there's no cost to you. So that's why also it's called a zero cost plan. So these are variants that have come up now. Okay.
And logically, it seems कि क्या तो अच्छी बात है.
अच्छी बात है, right? Like what's the point? In at least here, okay, I'm not making a return, but at least I'm getting my मेरे मुद्दल जो बोलते हैं ना, मेरा वापस आ गया. Like a principal at least is coming back. But now let's take that same example of a 1 crore cover costing somebody 15,000 rupees.
Right.
The minute you go for a zero cost plan or you go for a return of premium plan, this will become 2.5 times.
Okay.
This 15,000 will become whatever 30-40,000 rupees.
40,000.
Okay. And cover utna hi hai, 1 crore. Okay. Now we should go back to our same example. Let's assume you had put this 15,000 and put that remaining 25,000 जो आप extra भर रहे हैं, FD में डाल दो. You're better off. Correct. You know, you can do the math. You will actually make more money.
Correct.
Than the amount of premium being returned to you. Okay. So if you run the math, we'll try and, you know, when we publish this, we'll try and put it up on the screen.
Yeah.
But you'll make more money by just putting it in the FT. You'll get more than your premium back, and you're significantly covered. So I also think that the industries ended up doing some, I don't know who to blame, frankly. Should I blame the customer? Because they are not buying this product without being promised some money back.
Correct.
While it is good for them. Or should I blame the industry for preying on this need? But I think if we can all be aware, hopefully we'll make a better choice. Yeah.
The tough part now is that, God forbid something happens to me, how do I make sure that the family is actually taken care of and the claim is paid and stuff? Is there any way that I should do a few things to keep that in mind as well? Maybe I think first to inform the family that such an insurance exists. Yeah.
I think most important, inform the family, find a way to have that conversation. That's number one. Number two, I think one of the worst things anyone can do, I mentioned, right, a big part of what you're getting charged it depends on your medical condition, right? So one of the worst things you can do is not disclose your medical conditions to the insurance company. Because if I put it badly, aap to nikal liye. And now the insurance company has valid reasons to deny your claim because you did not.
Even if the cause of death is not that.
Cause of death could be anything. Let's say you said that you're a smoker.
You don't have hypertension, for instance.
Let's say you said you don't have hypertension, you know, and it turned out that you had hypertension. They technically can violate to deny your claim.
That's what people should understand.
Yeah. So the most important thing that you can do, not for yourself, for your family, because you will not be there to solve it.
Yeah.
And the last thing that your family needs to deal with is the fact that
they could have got it.
They could have got it, but now there's a legal reason why your family is not going to get the money. तो आपने 10 साल पैसा भी दिया, and actually आपके family को कुछ नहीं मिला, you know, and you will not ever be able to figure out whether that helped or no. So if you really want to be, I have no better words to say this, but if you really want to be true to your family, forget the insurance company. Lying to the insurance company may get you into problems, but you're actually really, if I were to put it, lying to your family.
Lying to your family, correct.
So just be super careful on ensuring. It is okay, I would say, to pay a little extra.
Exactly.
Okay, I have this small condition, I have some on and off BP or whatever it is, but not overshare. Tell the insurance company. I would go to the extent of saying, if the insurance company is saying, medical test sir for 1 crore cover is not required, I would say, le lo bhai, mera test le lo. I don't want anything to go wrong. I don't want any excuse that you may be able to come up with.
Deny my family that money.
Deny my family. I would be extra careful because this is, frankly, quite literally, this is once in a lifetime decision.
Correct.
You know, it is your life, right? Like now, you cannot be lazy or careful, you know, careless with it, right?
Correct.
Like there's nothing, I would say, nothing more critical than ensuring your family is taken care of. So I would go to the extreme of ensuring that my application form, I have checked everything. I have ensured that my insurer knows everything about my medical condition.
Correct. So it's squeaky clean. Yeah.
Squeaky clean, right? You don't want to give any grounds.
Correct.
For a violation.
Correct.
You know? So that's number two. Otherwise, I would really say you're playing with fire as far as your family is concerned. You know, that's number two. I think the third thing, what related to what people end up doing, is not informing their family, right? That's one clear area where at least your spouse or somebody responsible in the family, or your brother or whoever, sibling, somebody knows where is this policy, who is it with, you know, and what's the...
In today's world, it's digital, right? So...
Yeah, it's all possible, right? Like they don't even need to give up... Aajkal paper ki bhi zarurat nahi hai, right?
Correct.
Like you don't need a paper. It's all linked to your Aadhaar and this and that. It's just the sharing the information that I have a 5 crore policy with company A, company B.
Correct.
Whatever it is, here is the policy number, or you can at least contact this number. My phone number is registered with that.
Correct.
Utna bhi bata diya,
Kafi.
you know, is there.
And the whole family gets it in one go, or can you decide which, how it is dispersed?
You know, we all have, you know, families in which there could be problems, right? Like family problems, let me call it. These are not medical issues or whatever it is. My kids may be too young to handle the money, let's say. My spouse may have a condition.
Right.
You know, is not very, maybe, let's say, not fully adept at managing the finances at this point in time, for whatever reason, you know. I'm not talking capability, but let's say some genuine constraint.
Or you're separated.
You know, or you're separated, you know. Now, all of us have these different constructs going on in our families. And one of the things that we have noticed, and insurance companies now do this because of this, is that money, life insurance money, has been squandered away. You know, by someone in the family who's probably too young to understand, and that money is just, which was meant for maintaining lifestyle and being held carefully, has been, you know,
made into a trip to Vegas.
Trip to Vegas हो गया, घर खरीद लिया, stock market में डाल दिया कि double हो जाएगा, उड़ गया, you know, like all of these things have happened, and these are fairly common stories. So as much as it's important to buy it at the right time and ensure that the coverage is adequate, I would say it's equally important to decide how that claim money is going to be used, or who does it go to. If I have complete confidence in my spouse or the surviving member in the family that they'll be able to handle it, by all means, I need to make, this is in an insurance, or in insurance terms, it's called nominee.
Nominee,
who's the nominee on my policy? That is the person who's going to get all the money. I can also split my nominees and say that 50% of the money should go to my spouse, 30% should go to kid one, another, or 25% should go to each of my kids. Each of my kids. Let's say the kid is a minor. Then you can also say, okay, my spouse will take care of the money till they become, you know, adults.
Okay.
So all of
or you
this,
can even stagger the payments as well.
Yeah. The other thing is, if you believe that there is a lack of confidence in how that money will get handled, or maybe financial education is not that strong, then you can also ensure that that money doesn't come lump sum to the family.
Okay.
But it comes staggered, you know, some X lakhs every year, which helps them maintain the lifestyle. But there is not this large sum of money which has suddenly come. See, also as all middle class family, we're not suddenly used to 2 crores landing or 4 crores landing in a bank account.
Exactly.
Right? Like so, and then there's misutilization, people pushing you to invest in some different scheme, or the kid wanting to buy a car, or any of these things could happen. So if you want to avoid that, you can also instruct the insurance company to say, hey, ये हर साल आप इतना दे दो, and that'll continue, and the insurance company has to legally make sure that whatever you have, it's like creating a rule book.
Correct.
Give
Whatever
X to my wife, Y to my child, give it over so many years. All of that, the insurance company is legally responsible for.
So basically, what we are saying is we have these options also of disbursement and of how the claim has to be satisfied. So it's good for you to know your family, to understand that this is the best way for it to be dispersed in case of an unfortunate incident. And if the children are minors, then who to involve as, and who your appointee is and nominee is. And I didn't know there were these many choices. Once you buy the claim and you think, ho gaya yaar, mera responsibility khatam ho gaya. But while giving it, while giving out the details, you have to make sure that you do it.
And also I would add, your family, you may buy the plan at 30. And let me say you figured out that one of your kids is irresponsible. And is, or maybe finding their feet in life or whatever it is. And now you're 40, 45 and you want to change. A lot of people also may make this decision one time as if their context is not changing. It's probably in my head not even a one time. You may set it up as per today when you buy it, but you're also free to maybe
you can change it.
Yeah, you can change it.
Very good.
You can change it because your family's context may change. Something may change.
Absolutely. Well, that's good to know that flexibility is available. I consider myself fairly aware and educated, but this has been eye-opening for me as well, Varun. And it's good. I mean, if it is so impactful to me, I can imagine how it's going to be for the audience. Thank you so very much. As
Thank
usual.
you. Thank you.
It was very enlightening.